Welcome to Bullrun with Angel. Disclaimer, I am not a financial advisor and the content in this video is for informational purposes only. It should not be considered financial advice. All investment decisions are made at your own risk. Please conduct your own research and if necessary, consult with a licensed financial advisor before making any investment decisions. Today we'll kick off with the latest financial news, covering key topics such as the Christmas Eve rally, where the Dow surged over 200 points in early trading, and the updated BOI report with new information and more. On Christmas Eve, stocks rose as the market aimed to achieve consecutive gains during the holiday week. The S&P 500 increased by 0.8%. The Dow Jones Industrial Average climbed by 260 points, and the NASDAQ Composite surged 1%, supported by a 5% rise in Tesla shares. With Amazon and Nvidia each gaining over 1%, let's take a look at some of the stocks making the biggest moves during this rally. Tesla surged over 5%, becoming one of the top large cap gainers and significantly boosting the NASDAQ's performance. But other tech companies also posted impressive gains. Amazon shares increased by approximately 1.6%, showing strong investor confidence. Nvidia Corporation rose by about 0.8%, continuing its positive trend amid interest in AI and semiconductor technologies. Broadcom experienced a 2.9% rise, contributing to the tech sector's overall uplift. Supermicro Computer Incorporated jumped 5.8%, marking it as one of the standout performers of the session. Next, we have a BOI Report update. This just happened on Monday, December 23rd, 2024. The Fifth Circuit Court of Appeals recently reinstated the Corporate Transparency Act's Beneficial Ownership Information Reporting Rule 1. This means that companies must now submit their initial BOI reports to the Financial Crimes Enforcement Network, FinCEN, by January 1st, 2025. The court granted a stay of the earlier injunction that had temporarily suspended the enforcement of the CTA and its reporting rules. This decision reinstates the obligation for companies to comply with the reporting deadlines while the case proceeds. Fifth Circuit stay restores Corporate Transparency Act BOI report. If you're wondering, reporting rule 1, it just refers to the beneficial ownership information reporting rule implemented by FinCEN under the Corporate Transparency Act, and this rule requires certain corporations, LLCs, and other similar entities to report information about their beneficial owners, individuals who ultimately own or control the company, to FinCEN. The goal is to prevent illicit activities by enhancing transparency in corporate ownership. If you or someone you know would like more information, please go to the official website link for more information. Now, earlier we discussed the market's aim for consecutive gains during the holiday week. If you're new to investing and eager to learn more about stocks and exchange-traded funds, ETFs, let's dive into what they are. This is a continuation from our previous video. We'll start with stocks. A stock represents partial ownership of a company. When you buy a share of a company, you become a shareholder and own a small fraction of that company. For example, if you buy a share of a tech company like Apple, you're betting that the company will grow and become more valuable over time. But when you talk about ETFs, remember that an ETF is like a container or a basket of multiple investments, such as stocks, bonds, or other assets that are bundled together. Buying an ETF means you own small portions of all the assets in the basket. For example, an ETF that tracks the S&P 500 includes shares from the top 500 companies in the U.S. Here are some similarities. Both stocks and ETFs can be bought or sold during trading hours on an exchange like the New York Stock Exchange or NASDAQ. The prices of both stocks and ETFs fluctuate throughout the day based on market demand and supply. Now, both can increase in value, allowing you to sell for a profit or earn dividends if applicable. Now, you may be wondering what distinguishes stocks from ETFs. So when we talk about the features of ownership, with stocks, it's ownership in a single company. ETFs, ownership in a collection of investments. The risk level for stocks is a higher risk, and it depends on one company's performance. ETFs have a lower risk and is diversified across many investments. For stocks, when we talk about research, it requires analyzing a company's performance, industry trends, and financials. ETFs require minimal research and they are pre-diversified. And a lot of people like to mention to make sure that you have diversification within your portfolio. Remember, with stocks, it's limited and you need to buy many different stocks to diversify. With ETFs, it's automatically diversified across multiple companies or sectors. As far as the cost, for stocks, it can be expensive to buy shares of high-priced stocks. With ETFs, it's generally affordable and you buy fractional ownership of the ETF's assets. Now, we're going to talk about the pros and cons of each. Here are the pros for stocks, and I'll do the cons. And on the next slide, I'll talk about the pros and cons for ETFs. The pros for stocks is that you have a high reward potential. If the company performs exceptionally well, your returns can be significant. You decide which companies to invest in based on your preferences and research. And some companies do pay dividends or cash rewards to shareholders. The cons, it's a higher risk. And if the company performs poorly, you could lose all or most of your investment. It does require research. In order to make good decisions, you need to study financial statements, news, and market trends. And the diversification is limited. Owning a few stocks may expose you to unnecessary risk. Now, when we look at the pros and cons of ETFs, the pros are it spreads out risk by investing in many companies or sectors. It's lower risk. If one company in the ETF underperforms, others may perform well to balance it out. For cost effective, a single ETF can give you exposure to hundreds of investments, ease of access, no need to pick individual stocks. Fund managers or indexes handle the selection. But we do have a few cons, limited customization. You can't choose these specific companies in the ETF. Now, some ETFs do charge small fees for administration and management. And since ETFs spread risk, they usually don't grow as explosively as individual high-performing stocks. Now, just make sure that you remember that if you decide to invest in stocks or ETFs, that these investment decisions are made at your own risk. Make sure you always conduct your own research. And if necessary, please remember to consult with a licensed financial advisor before making any investment decisions. But if you're wondering which one should you choose, if you are a beginner, ETFs are generally better because they are less risky and require less research. For risk takers, stocks offer the chance for higher rewards but come with higher risk. For diversification, ETFs win because they include a mix of assets. Now, as we conclude, our team is excited to share a holiday surprise with you all. Here are some of the top performing stocks and ETFs for 2024. Some of our top 5 stock picks are Vistra Corp, Planeteer, NVIDIA, Constellation Energy, and GEV. Our top 5 ETFs, we have the SPY, SPY, QQQ, VTI, IWM, and SCHP. And before I leave, I would like to wish everyone a happy holidays, and I hope you're enjoying this time with your family and friends. Stay tuned for the next episode.